Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 20th of November. Starting off with the FTSE 100, which is doing rather well, given that it looks like it's World War III. Here we're just nudging the 200-day line, which is rising at the moment around 81.15, and the next level up would be up towards the 50-day moving average, 82.20, perhaps even threatening that October resistance line at 82.50, although it's difficult to work out what might do that. On the downside, hoping that the floor of that one-year trend channel, now at 80.20, will stem any losses if we have them. RSI still below neutral 50 at 45, so that needs to clear that area to give us a momentum signal. Moving on to the DAX, and here it's been a slightly wobbly picture, but we've managed to stay on the right side of our notional rising trend channel there, 19,000, and just nudging the 50-day line here, just near 19,200. Basically in a range between 19,000 and 19,500 at the moment. RSI just on the wrong side of neutral 50, but as I said, it's basically a range, even though it's a bit volatile on the downside. Moving on to the Dow, which I suppose hasn't really recovered from RFK Jr. turning up and hitting the farmer stocks, but at least we're still finding support above the top of the gap there, 42,900, let's call it. The likely floor here, a combination of the 50-day moving average and the uptrend line there from August at 42,400. On the upside, hoping that we could get up to the top of the channel there from this time last year, 44,000 if we can stay above that gap top. RSI still at 53, so looks relatively benign in terms of this particular pullback. Moving on to Bitcoin, where we're hoping any day now that we'll get up to 100,000, 93,500 at the moment. We've got that resistance line projection there from April, which is at 100,000, and hoping we'll get that before the end of the year. With the way things are going, we should be able to get it by the end of this month, really, but that may be slightly optimistic. Nice bull flag here when just breaking out of that through 93,500. On the downside, not expect anything lower now than 85,000, the floor of the current flag, which is the second flag in this move. Moving on to gold, which had a rather torrid time until the geopolitical worries kicked in. Here you can see that we basically bounced off the old August resistance September support area near 25.60. And above that, looking for the 200-day moving average, 26.70, as an addition. The 50-day moving average there as an initial target. Obviously, the top of the channel here, and the recent highs near 2,800, but maybe that will have to wait for early next year if that happens. In terms of the floor of the channel, I suppose it's looking as I've just drawn now, with the market having bounced off that February line there, near 26.60. Next up is pound dollar, where one would hope that or think that this market will continue to weaken given the economic and interest rate outlook, but we've got the old August support there around 126.70 coming into play there. Had a little bit of a bull trap through it, but the next level down, if we do break down below the June support there, which was touched last week, 126.20, is that we have a threat of heading down towards 124.50, but at least in the near term, hopefully post-June support will hold. Moving along to the stocks, and starting off with Avacta, where strange situation here that we are looking rather sluggish near the lows. There was an uptrend line there that I drew the other day through basically 45 pence, but just below that now, and that risks this stock heading to the floor of that falling trend channel from back in July, as low as the 35 pence level over the next few sessions. What would turn this around now at the moment really would be a proper end of day close back above 48 pence, 49 pence, which has been recent resistance for the shares. Moving on to Alchemy, which seems to have revived itself after the big spurt that it had from below 40 pence last month. We bounced above the old October resistance there at 92 pence, and above that, looking for a retest of November's best levels at £1.30 plus. Hopefully as soon as the end of this month. An end of day close back above that gap there, 107, could be a buy trigger for some. The other point to note is that both the 50 and 200 day lines are rising now, so that means we're into a golden cross, or the run up to a golden cross, and that tends to be the strongest part of the cycle. With Bitcoin up, one would expect Coinsilium to be up, and here we go again in terms of that. In fact, shares bouncing quite well from the recent retracement. We were looking for 3.8 pence before, which was hit on the nose, or at least that line was. Hoping that we will get that revisited again with the 50 and 200-day lines both rising. That suggests we're going into a golden cross as well, hopefully over the next few weeks, and 5 pence, the target by the end of the year, or even sooner while we're above 3 pence. Moving on to a stock which I don't really look at very much, which is Condor Gold, but seeing it break out of its falling wedge and the 50-day moving average at 20.5 pence suggests that we could hit the top of that triangle there since June at 28 pence by the end of the month. Moving along to a stock which was requested for the RNS hot list, but it's included here anyway, both in that, which I've added it into, and also the Bulletin Board Heroes. We're breaking the 200-day line here at Critical Mineral for the first time since the second time this year, the first time since January. Initial target here 1.8 pence, but looking for up to 2.5 pence by the end of this year, by the end of the next month, given the latest news from the company today. On to Essensys, which I don't think anybody looks at, but here we have a decent looking chart, rising trend channel there from back in February. We've gapped up above the 200-day moving average. That suggests this is a very strong situation, and looking for 41 pence by the end of next month, especially while we remain above the 50-day line at 27 pence. Moving along to electric guitar, which seems to be falling for no particular reason apart from people wantonly throwing stones at it. Here you can see that we notionally bounced off the floor of a falling trend channel there, heading down to around 0.17 pence. Probably looking for the shares to at least get back to the previous November support, initial November support at 0.42, maybe as a target for the end of the year. And a bit of bullish divergence there, so lower price low there, but higher RSI trace, and that suggests that 0.4 pence plus could be possible while we remain above the 0.2 pence zone. On to Greatland, which has been slightly surprising, I think, in terms of the price action we had initially for November, but shares bouncing back well now. We're back above the 50-day line there, 6.1 pence, and looking for 7.5 pence by the end of the year, or even sooner, which is the top of a triangle from back in August. Obviously, the big excitement here, if we could clear the main stubborn 7.5 pence to 8 pence resistance, and that would hopefully get rid of the log jam that we've been in for many months. Moving on to Georgina, which is battling hard against the bears. Here you can see that we've had a bounce off that RSI uptrend line, and also we've bounced off that support line there. We're running towards 8 pence, above 8 pence, looking for 10.5 pence or so, 10.25 to be precise, which is the top of that falling trend channel. Best case would be up to 12.75 by the end of the year, while we remain above 8 pence. But interesting there that despite the bombardment the company's getting, the shares haven't actually gone any lower. Moving on to Kazera, which has an exemplary chart. Here we've got a rising trend channel from May, bouncing off that, and the 50-day moving average looking for 1.8 pence. Perhaps as soon as the end of next month, expect this to start to accelerate given the double bounce at RSI 50 that we've had in the last week. Upside valid while we remain above the 1 penny zone. Moving on to a stock which wasn't thinking I'd be covering again, but here it is, Made Tech, and here gapping up within that rising trend channel from March, top of the channel there, heading for 24 pence, so hopefully we can get that relatively soon, maybe in the next week or two, and a bounce on RSI 50 as well in the RSI window, plus the rising 50 and 200-day moving averages. So in fact, this does look like a bona fide, a strong situation. In terms of how high the shares could fly if they get up to 24 pence, it would probably be the upper parallel of that rising trend channel, heading for 34 pence rather, on a 2 to 3 month view. On to Nostr Tera, which I never thought I'd look at again, and maybe I shouldn't be looking at it, but we've got to bounce off this rising trend channel base, 0.03, and maybe the shares have hit the bottom of the recent range. Ideally, the shares would be able to rally to fill the gap up to 0.08 and the 200-day moving average over the next month or so. On to the last two. The first one is Pensana, and here you can see that the shares are made good on that bear trap island reversal that we had last month. In fact, very good indeed, and above Recent resistance at 28 pence, looking with the shares to hit 35 pence by the end of this month. Finishing off with the type of stock I don't normally look at, but I think there was a massive share buyback at Sage. And what's interesting here is that obviously I normally only chart the small caps, but here you can see there was a bear trap island reversal, so gapping down there on the 31st of October and then gapping up on the 6th. So great signal there, and the notional entry point there around the £10, £10.20 area around the 6th and 7th of November. So you have plenty of time to get in on today's news. That's it from me today. More updates tomorrow.